What's up, guys? Welcome back to Zodiac Trading. So, in this episode, we're going to talk about Blackstone. And for those who are not quite familiar with the name Blackstone, uh, Blackstone is one of the largest alternative asset investor and also an asset allocator around the world. So, Blackstone is no doubt one of the leading brand and leading name, um, one of the largest institution. It oversees around we're talking about around 1 trillion assets of uh, AUM, which by the meaning of AUM actually means asset under management. So Blackstone actually manages $1 trillion amount of assets. So yes, Blackstone is huge, and comparatively speaking, Blackstone can be viewed as a nation. Maybe it's managing more money than most country on this planet. So there will be, if there is any news, and if there is any bad news or negative news, that might be, that people might want to look at it and want to know what's really happening. And right now, there are two things happen to Blackstone, and I think these two things are great indicator, telling us what really happened in the housing market. We're talking about housing market in Europe and also in U.S. United States. So first thing that happened to Blackstone is Blackstone defaults on 297 million euro Nordic property-backed commercial mortgage-backed securities. So basically, Blackstone has nearly 34% of the business relying. It is heavily relying on developing real estate and managing the business property. We're talking about offices. We're talking about shopping mall. So apparently, one of its subsidiary in Norway, which is a developer. Okay, it's a Finnish developer, and it has most of the assets, and they have these bonds. So Blackstone is supposed to pay off the dividends and to pay off, um, by the specific day when you come to like maturity. So Blackstone default because apparently there is uh, a disagreement between the bond investor and also the Blackstone, because Blackstone wanted to roll the bonds, so to extend the period so Blackstone can pay later. So but the bond investors kind of disagree with that, and that's one of the problem of the Blackstone's commercial mortgage-backed securities, and it's kind of creating a default problem for Blackstone. But the number itself is quite small because we're talking about 300 million euro, and Blackstone is overseeing around $1 trillion worth of assets. It shouldn't be a big problem for Blackstone. But the reason why this is an interesting case to look at is because there are lots of investors trying to pull out the money from the Blackstone, and in the same time, um, Finland and a lot of Eastern Europe nations and North Europe countries are facing a big capital flight is because of the Russian-Ukrainian war, because investors are extremely terrified by the fact that Putin is invading Ukraine, and people that's kind of scared the capital, so the capital is kind of flight out from Finland, and it's also hurting the economy because nobody is buying assets, nobody is buying uh, to support all these ever-growing land price and real estate price. So Blackstone apparently does not make any money and profit, good amount of profit from Finland. I guess that's the reason why it is committing default. And so, but I'm still saying this is definitely not a Lehman moment for Blackstone, because a lot of media like to use that as a headline, because that kind of it's a good headline. It makes you kind of wonder, is there something big's gonna happen? For me, I the number seems safe for a huge 1 trillion group, but the fact that you have to look at Blackstone, the other issue which we're going to talk about today is the second event actually impact the reputation and also the image of Blackstone, is that there are huge amount of capital withdrawal from the Blackstone recently, from one of the subsidiary of Blackstone, the B rates. Okay, so B rates is real estate income trust. So real estate income trust is sort of financial product that, if you don't want to develop a shopping mall, you don't want to develop all these offices, with your own capital, and you don't want it because obviously you need a large amount of capital to do that. So what you do is you can put your money in the rates, and then you will get a dividend, you will get a percentage of return as each month goes. So these B rates became extremely popular for investors around the world. And there is a good merit about these B rates, is that you're 100% capable of withdrawing any amount of money from B rates on each month. So there will be a specific date, you'll be able to withdraw that amount of money, and it's very flexible. So most of the rates, a lot of rates are like, if you invest in, you have to put your money in that rates and kind of lock up for several years until you get paid. So I think that's one key advantage of, the reason why investors like to put their money in B rates. But recently, there's a huge amount of money outflow from the B rates, and there are different reasons why people are pulling out the money out of Blackstone. The first reason is that right now we're suffering with this inflation thing, and with these very high inflation. I'm not saying it's a high inflation, but I'm saying the inflation is kind of resilient. The resilient inflation is causing a lot of assets, the return of these assets, the yields of these assets go down. And then that's why you don't make as much money. And then the second thing is because the Fed is fighting the inflation, so that's why the Fed is raising interest rate. And right now, with interest rate hiking to 5%, a lot of companies are gonna suffer. A lot of banks are gonna have to pay more amount of money out of its capital. So there will be a cost of money. That cost of money just go up because the rates go up. And then the third reason is that the Ukrainian war, that's kind of really bad to the business, especially for a European real estate property market. So I guess that's the reason why they have these constant money outflow from B rates. And also the fifth reason is that a lot of investors have very pessimistic view. They're holding pessimistic view when it comes to the future of real estate property development, because they figure that one thing about these real estate market is that they are quite interest rate linked, and it's kind of sensitive. So there are two things. These two events actually impact the Blackstone. It's not a major event. It's not something like, it's not something huge, but it definitely tells you a signal that the housing market, with the interest rate hiking, the housing market around the world slow a bit, and then you don't get as much as return as before. So that's going to hurt the real estate market as well. So in conclusion, I believe that with these default, this is a minor default, and it's not going to affect Blackstone in the long run. And the fact that it's defaulting, it's not going to impact the Blackstone's reputation, because there is another special purpose vehicle, as we call this as SPV, which is a cell company overseeing these Nordic property backed commercial backed securities. So I think that these kind of event can be viewed as a signal. If you want to invest or you want to buy a house in Europe right now, you better think and you better consider very carefully before you put your money in. And then also about these B-rate thing, Blackstone have done many things to try to prevent people withdrawing these amount of money out of these funds. What they do is they try to limit people from withdrawing the money, and also because people are withdrawing a huge amount of money from B rates, the Blackstone has to sell properties for cash. That's why the Blackstone sold many hotels and resorts for cash, and that's going to create some liquidity problem, especially because Blackstone is a large investor, a major one. So in order to get this money, Blackstone needs to sell out all these assets, and it's not easy to buy back these assets, because you think about this: if you are buying shares of a hotel, if you are buying shares of a particular resort, and it's probably take you some amount of time to get these shares back, and you need to get the shares with another good opportunity and with another good bargain. So I think that's the problem with the B rates right now, is that because they have to pay back their investors, so that's why they have these liquidity problem. So I think global investors should look at these two specific signals, and you have to know that right now investing in real estate isn't the best trade, and I would not encourage any of my readers to buy or to long any real estate properties. But as soon as this Ukrainian thing ends, and if the Fed changing the policy, we're talking about pivot, we're talking about Fed lowering its interest rate, maybe that's a good time to long real estate. But right now, please hold still and beware of the risk. So thank you guys for watching, and if you like my content, please like, and also help me with that like button and share and subscribe. I will see you in next episode. Bye.